Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Parmar.
Welcome to this section of Wealth Matters podcast, where we talk about investment ideas, where I analyze investments or platforms, or I review some of the investments or platforms I have been using. So let's get to it. Today, I want to talk about, because everyone mentions that, oh, yeah, I put the money in this bank or that bank, and I'm able to get 0.5% interest or maybe 1% interest by putting it as a CD, right? So I want to talk about an investment which I have been doing and which is like 100% guaranteed, almost 100%. Nothing is guaranteed, but almost 100% guaranteed by US government, which will pay you 3 to 4% interest, especially the inflation is running rampant, as you guys know, from just because we are working on two construction projects. We are looking at a senior housing construction project right now, large one, like huge one. And just looking at our numbers, from in if the lumber price have not gone up, we would have saved $1 million just from that. And we are building a single family houses, or not a single, a lot, about 8 lots we have in Southern California or Central California. We are trying to start that project again. The construction costs have gone up like crazy. Just looking at it from 2009 to 2019, lumber ran about $400 per thousand board feet just for 10 years. Last month, it hit a high of $1,600. It went from January 2020 to just January of 2021, it went up 300%. And now it's been dropping, and I'm hoping that it continues to drop. But even after this pullback, it's still trading around $900. That's 225% above the average. Used car prices are up, used truck prices are up, even basic food items are all up sharply, right? As you can tell, even just looking at the inflation from April, it went from 2% to over 4%. Now the government has come out and said that instead of trying to keep the inflation at 2.4%, they think that it would go up to on average 3.4%. So any dollars you keep in the bank, you keep it with you. If you don't invest, if you are just doing savings, you are losing money every year. So let's say you start with $100 every year. The next year it becomes $98 if we consider 2% inflation. But if US government is saying that it would be over 3%, 3.4 or 4%, that every $100 you have would become $96 next year, right? So this is how inflation eats into your savings. So this is why I don't try to keep my money in savings account. Either I use the HELOC strategy to pay down my mortgage. So that way my money, which would be sitting in the savings account, it sits in an HELOC line, and it basically earns me money by reducing my mortgage interest. So that's one criteria. The second, one idea. The second idea I use is put that money in life insurance, and which will generate me 4 to 5% dividend. That's another good idea. And same way as HELOC. So people always tell me, why would you do that? Why wouldn't you put in real estate or cryptos? Because I do a lot of those. Remember, real estate and cryptos are long-term investment, illiquid investments. Cryptos are not illiquid, but because the market is moving so volatile, that you can't just keep money up, move money in and out. Especially if someone had bought Bitcoin at 60,000, today it's 32,000. You can't just sell that Bitcoin at a loss, right? You can if you want to, if you need that money, and that's why you keep the money, liquid money, in savings or your checking account, right? But by using the HELOC strategy, I'm able to pay down the mortgage faster, and I can take that money out as and when I need to. So, or in life insurance case, I put it to generating dividend, and whenever I need that money, I would just loan it myself. So by doing that, my money is working in two places. So third strategy I saw, because was I had already started doing it, but I remembered about it because I'm always looking into ideas about this particular section of the podcast. So in this particular case, it's something which is available to every US residents. This is mainly for US residents. So in what this is, it's an US savings bond that actually fights inflation. This is pretty cool. It's called Series I savings bonds. You can, or I bonds, you can look into them on the Treasury Direct website. That's where I have bought it. And of course, there are some scenarios or things you have to keep in mind. It's right now offering 3.5%, 4% of a composite rate. That's the total interest paid out, and which is as high as it's been from, I don't know, in 5-10 years. So it's pretty cool. And the new rate is announced every 6 months on May 1st and November 1st. So I have been looking into it. I invested a little, but I may put some more because it's I bonds are a safe and income generating product, right? So that's why I like it. Instead of keeping my money in FDIC insured bank account or CD, I'm not gonna make much, and pretty much these I bonds are as safe as you have money in the bank. So the idea is you can purchase up to $10,000 of electronic I bonds, right, per social security number. So if you are a family of four, you can actually put 10,000 for each. So that's pretty cool. You have to go to treasurydirect.gov, and actually I will share my screen so that you can look into what I'm doing right now. So, and of course, this is not a suggestion, but if you are keeping money in the bank, that I would highly recommend you look into the treasurydirect.gov and look at this. And they have a lot of other bonds, right? So definitely look at a lot of other bonds as well. I'm opening interest rates for Series I savings bonds, and you can see that the interest rate right now through October 21st is 3.54%. That's pretty cool. And the second thing you want to look at, is it taxable? Federal and income tax, yes, but you don't have to pay tax on that interest for state tax, right? So state and local income tax is no. So that's another good thing. Of course, I would prefer to buy something where I don't have to pay any tax, but even right now at this inflation rate, having something like this with me, this is pretty cool. And how long must I keep an I bond? I bonds earn interest for 30 years unless you cash them first. You can cash them out after 1 year. So 1 year, it's illiquid. Remember that. And then after 1 year, if you cash them out before first 5 years, you lose the previous 3 months worth of interest. So let's say you keep it for a year and then you cash it out after, let's say, 15 months, you earn interest for the first 12 months and not the last 3 months, right? But if you keep it for first 5 years, you will get the exact interest which has been offered through the treasurydirect.gov website. You can also look into Series E bond. Their interest is barely 0.1%, right? So I couldn't remember what it was, but there are lots of other mature bonds and other securities you can look into treasurydirect.gov, and this is all provided by U.S. government. So this is as secure as possible, as well as your money is not only secure, but it's also as guaranteed as possible you will see anywhere else. So actually, and anyone watching on YouTube, I am sharing my screen. I'm opening the link how to buy Series I savings bond. So you can buy them directly uh, through the website. If you want to buy paper bonds, you can only buy it when you file a tax return. So electronic bonds, you can buy them online, and paper bonds, you can buy when you file a tax return. You can say that I want to buy paper bonds, and you got to have a refund to apply, use it to purchase those paper bonds. So I highly recommend, if you are someone who likes to just keep the money on side, wait for the right deal or not. These are some of the ways, as I said, using HELOC strategy to pay down your mortgage, using high cash value life insurance. And this is another way where if I want to keep some illiquid money for 1 year, right? So only first year is illiquid. After that, it's pretty much liquid. Then you can look into Series I bond. So do check out the website treasurydirect.gov and look at all of other bonds. Maybe if not this bonds or not this investment, something else will work. So let me know what you think. I highly recommend you subscribe to the podcast on Apple, iTunes, or other podcast platform, as well as share with your friends. And if you're watching this on YouTube, please subscribe and hit that bell icon so that you can get notified when I release another video. Thank you so much for watching, and happy investing.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!